Let's analyze the charts for February 4, 2022. This is a daily chart of the S&P 500. Today was, say, a neutral day. Bullish thing about today was the fact that it sold off and was able to bounce off the 4450 level. Around there is the 10-day moving average and the 200-day moving average. So it acted as very strong support. That was nice. Big bounce after that. Um, went much higher, and it reversed lower, dipping down below the 20-day moving average and the 5-day moving average. So that was very bearish. I think is now establishing this range, trading between 4600 and 4450. That's 150 points. So this range, if it starts trading above that 4600 level, of course, it's going to be very bullish. The only obstacle moving average above that will be the 50. But if it happens in the next few sessions, maybe that 50 will dip below 4600 and will make this setup even more bullish. Strong support, as I mentioned before, it will be 44 between 4450 and 4430. It dips below that, below here, 4430, and I will consider shorting the S&P 500. If we start trading around this area, I'll be looking for a reversal to move higher. At that point, I will go long. If, however, we dip below here, then I will go short. So really, points where I'm interested in buying will be down here, up here, and possibly it really depends on the price action, real-time price action, if it pushes above the 20-day moving average again. But really, the main setup that I'm looking for is, I'll probably say it's down here, either long or short. Now it's trading between all these moving averages, so trading will be very choppy. I'll take a look at the Nasdaq 100. This one is on live support. In dips below 14,400, and it could easily see a visit down here to the lows. It was able to push, back up above the 10-day moving average, but it's trading below all these moving averages, and all these moving averages are declining. So the path of least resistance for this one is definitely south. However, if for some reason tomorrow, or I should say Monday, we trade below this level, I will not short it. I don't think I will consider shorting it unless we spend a little more time here, consolidate more, and push lower. Then it will make this setup more valid to the downside. But anything here will be very choppy between this level, this level and this level. I really don't see anything that gets my attention. Between moving averages, it will be very choppy, up and down, up and down. That's not what I want. I want to see some type of consolidation, but we'll see. Conclusion, this one doesn't look good. Dow Jones Industrial Average. Of all the indices, this is the one that looks more interesting. Very tight range now. Here between 35,700 and 34, say 750. That's like a range of roughly 1,000 points. But look, it's trading all the moving averages are between this range. Pushes above this level, I will consider going long. Normally, I don't really trade the Dow Jones because whenever the stock market bounces, I prefer trading the Nasdaq 100 or the S&P 500 because I'm better at managing my position. But this one, it could be the exception. And then if it dips below 34, today's or Friday's low, then that could be a nice short. Anything in between here, it will be very choppy between all these moving averages, but this pattern is very interesting. I'll be watching it very closely on Monday. I like it. Let's now take a look at the Philly Semiconductor Index. This one's been very choppy compared to the other indices, and this doesn't consolidate. Let me clear that. This one found, I thought it will find strong support around the 10 and the 200-day moving average. Nope, open around that area, dipped below that, quickly pushed higher. It was able to at least close above that level, but I think this one, same as the Nasdaq, is just barely some life support. This below levels that I'll be watching, just below Friday's low, and it can get really ugly. You know, going down here back to these lows. Yeah, support. I see some support here, but really, I think volatility will pick up, and it can easily dip down below that around that level, and see how it reacts once we get down to here. But like I said, this one's been very difficult to trade, and now it's, yeah, all these moving averages still far away from these moving averages, but yeah, the path of least resistance is south. Small caps, also 2000 IWM ETF. This one, um, no exception, hasn't been the exception. It's been the weakest of all the indices, trading below all the other moving averages. All the other indices, at least, they're trading close to the 20-day moving average or higher moving averages. This one was only able to make it above the 10-day moving average. And now it actually closed right at the 10-day moving average below, and now it's below the 5-day moving average. So this one really is very weak. It's trading around this range here. What's 203? That high right there, 203, and the low 190. So anything in here, I'm really not interested. I mean, it doesn't really tell you anything what the next move will be. You have to would have to break, push above this level or this level to be able to really trade it. Anything around here in between could be very choppy, as we've seen it before. We saw it up here, how choppy it can really get, the IWM. Yeah, for this one, the path of least resistance is definitely south. So conclusion for all the indices, we have divergences. This is like the worst of all. Nasdaq 100 doesn't look all that great. Same for the semiconductor index. S&P 500, it looks kind of decent. Hard to say where the next move will be, up or down. And the Dow Jones Industrial Average, I think that's the most interesting setup. Um, and I think is the most bullish of all the indices. But yeah, good luck trading on Monday. It's going to be an exciting day. I'm looking forward to that. Thanks for stopping by. And if you haven't subscribed, you should consider subscribing. Thanks for stopping by, and I hope you are learning from these videos.